We have two questions for you. You ready? Question number one. Do you know how many realtors sold 0 homes in 2024? Be sure to stay tuned to the end for the answer. Now, question number two. Do you feel like our real estate market is schizophrenic and mortgage rates are jumping around like a monkey on crack? Well, you are not alone. Welcome to your market update for the first quarter of 2025. I'm Wade Perry of the Perry Properties Group at eXp. And before we dive into this brief market update, do me a favor, please hit that subscribe button, give it a like so we can keep you in the know on all of our local market activity. Let's talk about prices, rates, and what you should do now. One caveat before we get started, different price points in different geographic areas will have different results. So when I give you numbers, please keep in mind that these are averages. And should you have questions about your specific area, well, we would love to give you a more detailed analysis. Let's talk about prices. Per the MLS, the average home price in the greater Denver market appreciated 3% in 2024. While this is closer to long-term historical averages, it pales in comparison to the double-digit returns of 2020 and 21. This cooling off in appreciation is due primarily to mortgage rates doubling during 2022 from 3.25% to 6.5%, and then all the way to 8% in November of 23. We believe 25 will be another year of appreciation in that 3 to 4% range. Let's talk about why we believe this as we discuss mortgage rates. Many people, just like you, are a bit confused by today's mortgage rates. They ask me almost every day, hey Wade, if the Fed lowered rates by a full % in the fall, why did mortgage rates go up by a full %? And the simple answer is the Fed does not control mortgage rates. The more detailed answer is the Fed funds rate is the short-term rate when banks borrow money. Conversely, a 30-year mortgage is a long-term rate, and it is determined by the bond market. So why are rates staying high, you ask? First, let's keep the word high in context. Over the last 50 years, the 30-year fixed mortgage averaged roughly 8%. So today's rate, around 7 1/8, is in line with the average. However, relative to the 3% decade from 2012 to 22, it does seem really high. Second, the bond market is in a wait-and-see mode. As you're likely aware, our new administration in Washington will be ushering in a very pro-growth agenda. And while no one knows for sure what this will look like, tariffs, deregulation, the bond market players are not going to regain confidence in buying bonds, which will bring rates lower until they are more certain of the new administration's path. We believe we will see rates bounce around that 7% number until late April or May. We believe that rates will begin to come down into the lower half of the sixes during the second half of the year. We also believe that 6% will be our new normal in 2026, with rates fluctuating between 5.5% and 6.5%. So what should you do now? Well, if you're a buyer, this is a fantastic opportunity. Inventory, aka the number of homes available for sale, is up 30% versus a year ago. And homes are staying on the market 20% longer than a year ago. This means that buyers like you have more properties from which to choose, and you likely have more time to evaluate each property than you did during the crazy times in the recent past. Well, if you're a seller, this can also be a very advantageous time for you. Notice I said can be. This is not 2021 or 22 when properties were selling for over original list price and were on the market for an average of 19 and 22 days respectively. Today, in the last 6 months of 24, properties which sold in less than 14 days did so at only 97% of original list price. And those sellers who overpriced their property, well, they took over 60 days to sell and they received a dismal 87% of original list price. The takeaway for those of you who are thinking about selling is to price your property accurately. If you don't, it could cost you 10% or more of your original list price, which could be $50,000, $100,000, or several hundreds of thousands of dollars. Now, at the start, we promised we would give you the answer to question number 1. In 2024, nearly 50%, or 700,000 realtors in America, sold exactly 0 homes. So to give yourself the best opportunity to price your property accurately, make sure you hire a full-time professional team of real estate advisors. And when you're referred to a realtor or real estate team, make sure to ask them about their history as a realtor. How many homes have they sold in total? How many in the past year? What percentage of their business comes from repeat clients and referrals? These are just a few of the questions you should be asking. To summarize, values will appreciate 3 to 4% this year. Rates will decline, but not significantly until the second half of 2025. Buyers have a fantastic opportunity to buy now and refi later. And sellers who hire proven full-time professionals and listen to their counsel can achieve great results. Always remember, when it comes to one of your largest assets, your home, the Perry Properties Group at eXp is always here for you. We are just a text, call, or email away. It's a great life.